And times are rough for lots of Americans right now due to job layoffs, furloughs, and uncertainty about the coronavirus. Countless people are strapped for cash, but a reverse mortgage could give some consumers breathing room. Reverse mortgages are often advertised to seniors as a way to access the equity in their homes. A reverse mortgage allows people to convert part of that equity into cash without having to sell the property. The cash can be paid in installments or a lump sum, so typically you don't need to pay anything back if you live in your house. But the Better Business Bureau warns homeowners need to fully understand all costs, terms, and conditions before applying for a reverse mortgage. Joining us is Chris Stedford with the BBB. It's great having you here, Chris.
Thank you, Darian.
And first things first, Chris, homeowners must know the basics to all of this, right?
Absolutely. So you've got to be 62 years old. You have to own your house and have sufficient equity in the house before you can even qualify for a reverse mortgage. And the reverse mortgage has to be on your primary residence. So you have to meet all three of those criteria before you can even contemplate getting a reverse mortgage. So look at those and see if you qualify. And another good tip, Darian, is then to have a big conversation with your whole family so that they understand the process that you're thinking about taking in by having a reverse mortgage, because it can have impacts in terms of inheritance down the road.
Yeah, I was just about to ask that. Just not something you should go about just doing it alone. As people say, well, it's my business, I want to do it alone. But if you have children or power of attorneys, it's best to have at least them have knowledge on all of this, right?
Absolutely, because everybody needs to understand that you're withdrawing the equity in the home. And while you might be told that your children can still inherit your house, there's a hitch to that, Darian, which is that they're going to have to pay back the money that has been taken out of the equity in the house, along with any interest charges that have accumulated during that period. So there's a hitch to that, and the whole family needs to know that. And there might be other vehicles available for people looking to get money out of their house. They might want to think about a home equity loan instead of a reverse mortgage. It just depends upon the circumstances, and people need to think about where they are, where they want to be, and then go forward. And you always want to watch out for those upfront fees. So if you do move forward with a reverse mortgage, you want to understand what all of those fees are going to be, what you're going to have to pay to do it, but after you've made a decision that it's a good fit for your family.
Yeah, and with everything, there's always costs, right? Would you recommend people making sure that they are reading that fine print at the bottom?
Always. So you need to understand that there are going to be things like origination fees, appraisal fees, things like that you're going to have to pay. And you need to understand that that is a cost of that. And that if you get a reverse mortgage, you're also going to have to keep up with the insurance costs, the taxes on the property, and you're required to maintain the property in a condition that keeps its value where it needs to be to support the reverse mortgage.
Well, thank you so much for joining us, Chris. Again, you can find more information about reverse mortgages at bbb.org. Thank you, Chris.
Thank you.